So Kyle, tell me about one of the things that I think has been just amazing that you've been involved in. And I know you're on the board of directors at a credit union. I know you've been involved in credit unions. You've been doing a lot of work with credit unions. Yeah. But you have found something that is just amazing to me that helps their credit union tremendously from a financial perspective.
Yeah, happy to. It's been really, really fun to work with credit unions with this product. One of their biggest challenges that they have within the space is that the NCUA, National Credit Union Association, restricted their investments that they can invest in pretty dramatically compared to banks. So in the minds of the consumer, there's not much difference between a bank and a credit union. It's where I go to deposit funds, it's where I get loans, my credit card comes from there. They can't really see a difference. However, they're playing from a very different set of rules. So a credit union traditionally can really only invest in government-issued bonds, which, as you know, that's not a very sexy or attractive return profile at all. It's going to be next to nothing.
All right.
Especially if we look at 3 years ago, the interest rate environment that we were in, those government bonds they purchased are substantially underwater today. They might be yielding to maybe 3% on a good day. Not a whole lot you're going to be able to do with that. So credit unions have these bonds on their balance sheet that's dragging down their balance sheet because they have unrealized losses within those bonds. There's really nothing they can do about it. However, the NCUA came out with guidelines called 70119 that allowed a credit union to use what would otherwise be impermissible investments within their investment portfolios, with the caveat that they have to use the gains from those investments for employee benefits.
Okay.
So there's a long list of things that can be considered employee benefits, things like deferred comp, things like training, health insurance. Some of the largest budget items that a business has is part of how they pay for their people. And the reason why the NCUA did that was to allow the credit unions to be more competitive with what the banks were offering to their employees. Mm-hmm. So it's better for the consumer if the credit union can retain key talent. So they use 70119 to help give them an arm up in retaining key talent. So that's the guidelines that govern the strategy that we're able to help credit unions with. Is there's an investment strategy that will allow them to have a product that has a bonus on the way into the product that can help offset the losses that they'll realize from selling those underwater bonds, and then has a floor of 0, so it matches very well with the conservative risk profile of a credit union, and then a return profile that historically over the last 10 years has been north of 6%. Yeah. So well in addition to what we can even get today on government bonds. And the only caveat is they have to pay for things they would have already paid for anyways in the terms of employee benefits. So it's been a win-win for the credit union because they're able to bolster their balance sheet, they're able to use those funds to keep and retain key talent, and they're able to help offload some of these really underwater bonds that are just dead weight on the credit union.
So let me make sure I understand.
Yeah.
How much can the bonds lose, or the strategy lose?
It can't lose money. When the market's down 50%, those annuities, that strategy will be down 0.
Okay.
So it has a floor of 0. The worst it can ever do in a given year is 0%.
Okay. And when you get into the investment, there's a bonus?
There's a bonus, yes, that is issued by the carrier and varies over time, but it can be somewhere around the range of 10% plus, depending on what the contract looks like.
And that's a cash bonus?
That's a cash bonus credited to the policy.
That sounds great. So who is it that can use this? Obviously credit unions.
Credit unions,
Is it any credit union, or is it just certain ones?
No, it's any credit union. The amount they can invest in the strategy is going to be equal to what they're paying in employee benefits.
Okay.
So we have a calculation we can use to help them determine what that amount is. But I mean, if you have a $20 million policy that's earning 5%, that's what we have to use as the bogey for that $10 million or that $1 million in employee costs. So it's not that hard in today's environment to rack up $1 million of employee costs.
So let me ask a question. Have you actually done this?
I have.
Or is this just theory?
No, I have.
Okay.
I've done them personally, and the partner that we work with has already done about $500 million in the industry. And I think that the potential is tremendous.